Dhananjay Sinha as well joins in on the show. We've got Naresh Mirani too. Naresh, let me come to you first. What does this crack of the 200 DMA mean, and what kind of downside does it further open from these levels now?
So a crack below that 23,550 would not be something which we'd look out on a daily basis, but the band at 23,300, which is the high which we made on the opinion and poll day, and 23,550. So this is the area where we should start looking out for a reversal signal, 23,300 to 23,600. So that's the band. So we'll wait for a couple of days, see how price action is over here. Ideally, we are oversold. We've made RSI positive divergences. So this is a price point where you want to look out for reversal signal rather than selling more.
Watch out for the reversal signal when it comes through and instead of selling more. So clearly hoping for a recovery. But that's been the case, Dhananjay, for a while now. All through October, we were hoping that there will be a bit of a turnaround. 24,000 will be that bottom. Yes, earnings season has been weak, Dhananjay, but is it that weak that we have given up what, over 2,000 points? In fact, 3,000 points almost from the highs.
Yeah, I think the market cap is actually from the peak is, if you look at the Nifty, it has fallen by roughly about 44 lakh crores. Actually, it's almost like 8%. And as percentage of GDP, it will be about 10 odd percent. So I think there is a considerable sort of decline, erosion in the valuation that is happening. And I think that is happening with the earning seasons, earnings trajectory showing up till now of all the listed companies, there is a contraction of about 13 odd percent. And last quarter also there was about 2 to 3% contraction. So I think the second quarter is sort of consolidating the view that the earnings trajectory were far more optimistic. So I think what is happening in the current season is across the board, especially in the cyclical sectors, there is a massive cutback in earnings and stuff. And look at steel, you look at cement. There's a margin pressure happening across the board, and we have seen numbers from consumer goods industry as well. So I think by and large, what is happening is that the market, which was largely driven by flows, especially the retail flows, have actually started to align with the market fundamental, which is earnings growth. And I think what is also adding to the multiple contraction is the fact that your global factors which are feeding into valuations is, let's say, the risk-free rate. US yields have gone up to 435% from a low of 380 or something. So I think that is also sort of compressing the valuation. And apart from that, there are valuations issues, the volatility, the uncertainty issues are there as well. So I think these are the things that are there, which are actually weighing on the market. People had expected that the re-election of Donald Trump would be positive for India and flows from an FI standpoint. It has not really translated. So I think these are the things that are there. I would say going forward, people would look for a better second half. A lot of companies are relying on better rural demand and better margins, etc. So that's the hope that people have. At this juncture, momentum seems to be fairly weak, and there doesn't seem to be much support coming from flows, even from the retail investors in India, as we are saying just now.
So, Dhananjay, you obviously wouldn't recommend buying the decline just yet, right? Or do you think there is some sort of sanity and valuation froth which has cooled off enough in certain pockets or segments of the market and one can buy right now?
So I would say that you see a lot of the headwinds that we were expecting is just about started. So I would say that we are not in a scenario where I would say that the earnings trajectory will start to bottom out. So I think where what we will need to really look at is a scenario where there is a significant correction in the commodity prices, for instance. Let's say the commodity prices fall by, let's say, 20-30%. Typically that happens when the capitulation happens, is where the margin starts to bottom out. So I think we'll need to wait for that. I would say that some of the stories with respect to rural revival, etc., can start showing up in the second half because of better monsoon, etc., that will start showing up. But I would say that it will. I think the next cycle in terms of earnings will arise only after a significant correction in commodity prices. So I think a lot of these things are yet to happen. I think the other issue is what is happening to the banking sector and the lending sector. We are seeing some signs of rising NPAs in the microfinance and NBFC sector. There is certain curtailment in lending growth, etc. All those things have just begun happening. So I would say that we'll need to wait. We need to be conservative. We will look for sectors that are less vulnerable to this kind of cycle.
Yeah, looking for those sectors which are a bit, which are less vulnerable at the moment. But Dhananjay, what the defensives of sorts, and I'm talking about, let's say, the IT and the pharma and the consumption of the world, be better placed than?
Yeah, I think we are hoping so. I would say in the overall correction, everything starts to correct, but I would say that some tailwinds would start to emerge. I would say pharma has been doing well recently, it's starting to correct, but I think pharma is one place that can be looked at. You know, even IT, I would say IT we like the space, especially because we think that the tailwinds for them from a term standpoint on let's say 2 3 years standpoint might actually pan out. I think hence the correction and all in the space might be looked as an opportunity. I would say, see, the space also includes staple companies, wherein we are seeing that companies are finding it difficult to sort of show significant volume growth trajectory, and there is a sort of tapering in the volume even for the premium segment. So I would say there is certain misses that consumer companies are showing, but I would say these are much lesser compared to relatively better compared to deep cyclical. Let's say if you look at cement industry, or let's say I would say steel as well, where the contraction in EBITDA is over 50% for many companies. So I think at some point of time, you know, as the consumer companies start to sort of see better valuation, people might actually start to dip into the correction over there. So I think those are the places where I think people can start looking at valuation. But at this juncture, market seem to be very volatile, and the momentum is something that will be very difficult to turn at this juncture.
That's a take coming in, and some of these defenses are better placed. Of course, they might also correct with the rest of the markets, but hopefully the magnitude of correction is expected to be lower. What's holding out today in the trading session today? Then some of the pharma names, Cadilla, Suvin Pharma, Piramal Pharma, they are seeing a bit of a recovery at the moment. KNR Construction is a result reaction, so that's holding up. You also have names like Bharti Hexacom, which are actually coming back. Vodafone Idea is down in the trading session today. Remember, it comes out with earnings, so just watching out for that one. But overall, the telecom space too has been fairly volatile. And then some of these chemical names are holding out okay. Aviniti Organic, GSFC. These are some of the names in the green. On the losing side, a Techno Electric is down, a Suzlon Energy is coming under pressure, and then Century Textiles too down in the red. In fact, real estate as a pack has seen quite a bit of pressure right now, Naresh, whether it's Century, whether it's the rest of the names, because that's one of the biggest loser in terms of the sectoral indices today. Any buys which are emerging at the moment?
Would wait for some more time, given the kind of rally we had seen in Nifty Realty in the 2023 bottom till now. So would wait out for some more time. They are sectors which generally have a high beta. So would look at it once we start seeing a signal of bottoming out on the Nifty, not as of now. And that would continue to focus on a DLF or a Godrej properties, which have started correcting right now.
Okay, that's the take coming in on realty. But Naresh, since we're talking about it, let's also address the weakness that one is seen in blue chip names like HDFC Bank, SBI from within the banking pack of late. Of course, today there's an RBL as well, which I can see, a Bandhan Bank also, both knocking down about 4% or so. But specifically on the charts of SBI and HDFC Bank, what do you foresee? And then, of course, your call on the Nifty Bank.
So if you look at HDFC Bank, the same struggle continues around that 1780, 1800 mark. We saw recovery. The stock was holding on around that area. Now we've broken below 1700. we go back to the same zone, which is where 1600, 1650 has been a support for the last 3-6 months. So that should be an area where it should find support. State Bank of India similarly tried to make a breakout move above 800 odd levels, went to 860, is now back to 800, 820 band. Multiple supports around 770. Similarly, on the Bank Nifty, the last few lows, if you look at it, is around 50,200, 50,400, and then 49,500. It's already at an equivalent of 23,000 of Nifty. We are back to the prices which Bank Nifty was on the day of elections. We are getting into that band. So overall, we are getting a support area for both the Nifty as well as the Bank Nifty.
And that's the take on Bank Nifty at 1200 point cut. Did I see that right? So it's just getting worse. In fact, the Nifty also at the lowest point of the trading session, and the 200-day moving average that we were talking about is at 23,545 if I have it right, and we are very close to that. In fact, for the Nifty, below the mark of 600, clearly 563 is where we are at, so not very far away. Let's take a look at which are the drags for the markets right now. Of course, everything is in the red, but just talking about the heavyweights that might be causing pressure to the markets at this point of time. And on the losing side, there are some of the names which will come up from the banking industry, my guess is. So HDFC Bank should be under pressure. Reliance should be the one which is under pressure. I'm missing out that data point at the moment. It's not really reflecting for me, but I'm guessing some of these heavyweights are the biggest pain point. Even SBI, ICICI, they all would be under pressure. Adani Ports, Apollo Hospitals. It's the entire market which is actually reeling under pressure. We'll do one thing. We'll take a short breather on the show and come back and track more on the markets because it's getting very volatile. Let's see whether we recover from here on or continue the slide downwards.
If you like this video, then like, share and subscribe to ET Now.